Entrepreneur, investor, and activist Ryan Cohen is getting involved with Alibaba stock. What does that potentially mean for Alibaba shareholders or Alibaba stock? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that subscribe button so let's understand what's going on. So Ryan Cohen is a meme stock icon. What is it? What does that even mean? So that means he got involved with a lot of various different meme stocks during the bubble. Automatically that puts me on like, this is a little probably closer to BS. Probably, my channel, you're going to watch, if you tune into YouTube, you're going to see a lot of nonsense out there. My channel, I'm trying to have no hype, mission focus. So when I look at something like this is more like this is more closer to hype. I'm probably not going to, think that this is really going to drive the stock long term. This is when you're talking about meme stock icon. I'm not getting that excited, but he is reported to have taken a several $100 million stake in Alibaba. What does that mean for Alibaba shareholders? What are his intentions? Well, he thinks the stock price could go much higher. So we do have something in common based on aggressive share repurchases and double-digit sales growth and potentially nearly 20% free cash flow growth over the next 5 years. What are my thoughts on that? Is that likely potentially to achieve? Well, a little bit about Ryan Cohen's background is that he is the founder or was the founder of Chewy stock, the #1 pet supply e-commerce platform that was later sold to PetSmart for several $1 billion. This personally, I think, enriched him to the tune of over $1 billion. His net worth is supposedly around that figure. He subsequently took much of that fortune investing in various different meme stocks like GameStop. When he bought GameStop, the stock rallied several 100%. Now he owns over 10% of the stock. He's now the chairman of GameStop. So a lot of folks have the thought that maybe he can turn things around for GameStop. I look at their results and I think, man, this is a crumbling retailer with huge losses. It's a lot easier to buy a 10% position than to turn around a struggling retailer. So I'm not seeing it. I'm not part of the faith here that this is, some sort of messiah that can turn around a dying business. I don't see it. And so what's this mean potentially for Alibaba stock, for Alibaba shareholders? First, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. Also recently launched 2 new investment courses for enterprising investors focused on financial statements and valuation analysis. A lot of investors struggled over the last few years as the bubble imploded, primarily because they weren't aware of financial statements or being able to analyze them or how to value stocks. So that's why I made those 2 reasonably priced courses. In full disclosure, this is not financial advice, and I do own a small stake in Alibaba stock. So when I look at Ryan Cohen's background, even though he is clearly a very successful entrepreneur, with the founding of Chewy, selling for several $1 billion, his own track record gives me pause. For example, he did get involved with Bed Bath & Beyond. Now the stock is supposedly, looking at bankruptcy. They look at a sizable debt load. They clearly do not have an unrivaled value proposition. That's what I'm looking for on this channel, companies with an unrivaled value proposition. And his involvement with Bed Bath & Beyond netted him a quick $60 million. He looked like a short-term investor, and his involvement got the stock, rip higher during this sort of the meme, the bubble, where everyone's like, oh my gosh, he's involved. Maybe this stock can go higher. But now, facing bankruptcy, the stock's a lot lower. You had an unfortunate development where the CFO, jumped from the building because, CEOs and probes of being potential a pump and dump scheme with Ryan Cohen. So I look at this and I'm thinking, man, I don't really care for him. Like I'm not, even if he's involved with Alibaba, even if he gets involved with any of my stocks, that's just not what I'm focused on. I'm focused on the fundamentals of the business. There's always going to be noise around the shareholder base. Oh, this person owns it. Oh, but that person owns it. But even if Warren Buffett gets involved, Michael Burry gets involved, you always want to understand, well, what are the fundamentals telling you about this business? And you want to make your own judgment based on the fundamentals. My goal here with this channel is to call out the fundamentals. Say, hey, Alibaba's fundamentals haven't been that great. I've called that over the last several quarters, saying, hey, it's very clear that they're losing market share. So that is a red flag for me personally. Ryan Cohen talking about potentially 20% annualized free cash flow growth for Alibaba strikes me as a bit of pie in the sky, but we'll see if that can even happen. I mean, they're making huge investments away from their historically really high margin e-commerce platform. They're making investments in the offline to online to offline channels that involve huge investments, and don't have the margins that their legacy, Taobao Tmall platform generated. So I'm very skeptical that his goals and aspirations, could actually achieve, could be achieved with Alibaba. But we'll see. We'll see what happens, with that potential growth that he was targeting. It's also worth calling out, like, look, this is a Chinese stock. This is not Bed Bath & Beyond. This is a Chinese stock with several $100 billion market cap. Ryan Cohen is a nothing relative to Alibaba. Certainly, the Chinese Communist Party does not care who he is. And so if the Chinese Communist Party says, hey, Alibaba, you're going to, invest, quote unquote, $15 billion in common prosperity, well, it doesn't matter what what Ryan Cohen thinks. This is what Alibaba is going to do. And so this is just a completely different territory. And I think it's a big nothing burger for Ryan Cohen to get involved. It's really just noise. Once again, you want to focus on the fundamentals. Are they actually growing their free cash flow? So far, that's been a struggling picture for them, as their core profit engines, have sort of been facing more competition, haven't been growing as much, but we'll see how that plays out. Another key aspect is I do actually agree with Cohen about the share repurchases, that they should have been more aggressive with their share repurchases, most recently talking about a $2 billion share repurpurchase program, re-upping their program by another $15 billion. But overall, they only reduced shares in the most recent period by something like 3% year over year. So when I look at a situation like this, I think, man, Alibaba had this opportunity, especially when the stock was really, really low, to just buy back a huge percentage of the company. They could have bought back 10, 20% of the stock if they had been more aggressive. There would have been clever ways for them to do this. And they just didn't do it. They didn't reward shareholders. And that's just another example. And I do want to see what happens with the upcoming quarterly reports to see the tune of their buyback, if that 3%, became closer to 5 to 10%. But if not, that just gives me further pause that whether or not I actually want to continue keeping Alibaba with my personal portfolio, because I want to see things where if the stock price goes lower and the company has the free cash flow, management can return it to shareholders, make shareholders benefit through the down cycle by returning, capital to shareholders, reducing the shares outstanding. If they didn't do it in a meaningful way, that's just another red flag that I've called out with Alibaba stock. So I look at this and we'll see what happens from here. I look at Ryan Cohen's involvement just sort of as amusement and noise. I don't think it fundamentally changes the picture at all. I look at Alibaba as potentially a cheap stock, and that's why I own part of it. But I want to see real execution, including favorable shareholder policies, to get me more interested in potentially buying more. I call out what I'm personally doing with my portfolio at unrivaledinvesting.com. For example, I recently was calling out a stock trading below liquidation value where management is actively looking to transform the business, potentially setting it up for several 100% upside. We'll see how that plays out. But that's an example where you could see transformative capital allocation policies. So far, I'm not seeing that from Alibaba stock. We will see. If you enjoyed this educational investment video, please make a point of hitting that subscribe button, hit that thumbs up. Thanks so much for watching Unrivaled Investing.